What's going on, traders? How we doing out there in the SPAC land? I know I'm seeing some in the green today. I hope you're having a better day than you had yesterday. Definitely smash the like button. Let's get the SPACs attack started. Today, we're going to have some great talk. Of course, we'll get through the watch list, talk about the movers, and then get into our interview with Vacasa. Yes, I said it, guys. Check it out. If you guys don't know about this company, you just might learn something today. So stick around and welcome to the SPACs Attack. What's going on out there, traders? How we doing? I hope you guys are enjoying the day. Let's go ahead and bring on the brains to the show. The one, the only, Chris Katje. What's going on, man?
What's going on, Mitch? Yeah, how we doing this Tuesday? Shout out to everyone joining us in the chat right now. Looks like the viewers are coming on over from our last stream.
Yeah, definitely. We got, of course, the loyal viewers, and then we got a bunch of you guys tuning on in. If you're seeing this on Twitter, hey, guys, come on over to our YouTube. Come hang out with us. We're going to talk some SPACs. We're going to talk some great investments, get into a good interview. And first things first, like we always do, Chris takes us behind the headlines, lets us know the top headlines in the SPAC industry. This is a great way for you guys to follow companies that you probably don't even know till today. Let's go ahead. Let's take it back. Show me what's up, Chris. What's going on out there?
All right, guys. Yeah, so up first, not a horribly busy day out there in SPAC land. We did get one deal announced this morning, and we do have some news to talk about. And then we'll get into our movers and look at that watch list. I already see one being mentioned in the chat that's getting a significant drop in price. We'll touch on that news. But up first for headlines, let's talk some analyst notes. So we have Berkshire Grey. So Credit Suisse initiating coverage on Berkshire Grey with a neutral rating and a price target of $8. That symbol BGRY. Again, an $8 price target on a company that went public via SPAC is never a positive. As of course, that $10 price point, is a key level to get back over if it has fallen down. This is a robotics company that helps warehouses with management. It does have some big deals, but still in the early stages. But keep an eye out on this one. Then we have EFTR, Effector Therapeutics. So JMP Securities initiating coverage with a market outperform and a price target of $33. If you remember from headlines yesterday, Effector also got an analyst note yesterday from Stifel with a hold rating and a $20 price target. So this is a small biotech company. It has a deal with Pfizer. This was a high flyer previously, and it is getting analyst attention this week. So EFTR up double digits today, could definitely be ready for another run with this attention that it is getting. And then we have EVGO, Credit Suisse initiating coverage with an outperform and a price target of $11. Not a great price target here, but this is one that has fallen down below $10. Was around the 717, a 52-week low it recently set. Up 5% on the news today. We'll take a look at maybe some of the EV players later on. And then we have TDAC, which of course is merging with lottery.com. Northland Capital initiating coverage with an outperform and a price target of $16. I've talked about this before. Anytime these SPACs are getting analyst ratings before the deal is complete, I think it's a bullish sign. The analyst is recognizing the opportunity in the company once the merger closes. I've been a fan of TDAC, lottery.com for a while. You can see on the chart there getting a nice lift recently, some nice volume in there. TDAC, again, their merger has not been completed. We've got shares at $12, up 5% today on that analyst note. And then some earnings. We have Big Bear. Big Bear is an artificial intelligence company merging with GIG. They reported first half revenue of $72 million, and they lowered their guidance to a range of $160 to $185 million. Previous guidance was 182. So keep an eye out. GIG, it's been mentioned as a artificial intelligence, a data, kind of like a mini Palantir. But the guidance there, definitely a possible cause for concern. And then we have Genius Sports winning the official data trading partnership with Golden Nugget Online Gaming. GNOG, of course, getting bought out by DraftKings, but Genius Sports will power, their data feed. So another win for Genius Sports. And then we did get a couple of votes set. We have KCAC sneaking in at the end of September 30th, merger vote date with Wallbox. LOKB on October 12th, that's with Navitas Semiconductor. And on October 19th, BOWX with WeWork, one of the largest SPAC deals out there. And then I mentioned EVgo in the analyst notes. We also got some news out today. The company announced that they passed the 300,000 customer milestone. So again, nation's largest public fast charging network. They highlighted that 300,000 customer level, so that could be one to watch. And then our big mover out there went public via SPAC. We have Helbiz, HLBZ. So Helbiz is a micro-mobility company. Over in Asia, they have e-scooters, e-bicycles, and some other vehicles, 35 cities, but they also own a media arm, and their media arm has been busy. So it announced a deal today with Amazon Italy, which is a unit, of course, of Amazon.com. So Amazon Prime in Italy will be able to broadcast Serie B matches for soccer using the rights that Helbiz has the exclusive deal on. This follows up a deal that they also signed with Fox for North America for the rights to the Serie B matches. So Helbiz, leader in micro-mobility, but now going hard on media deals as well. You can see that huge spike today. Shares are up over 100%. Again, diversifying itself away from just being a micro-mobility. They also have those soccer rights. And Helbiz will be presenting at our EVCon, Electric Vehicle Conference tomorrow, Benzinga, right here on YouTube. So look forward to hearing more from Helbiz on maybe how media could help play a role in their growth. And then our deal that was announced today, the ticker is GSQD. So this deal is bringing Transfix public. So Transfix has a goal of building the world's most connected and intelligent freight platform. Deal values the company at an enterprise value of $1.1 billion. G Square, who is behind the SPAC, they are an investor in Transfix. They invested in 2019. This is expected to close in the first quarter of 2022 with public shareholders owning 23.9% of the company. They use artificial intelligence and machine learning for a business-to-business marketplace. They use a capacity-focused approach to provide better efficiencies for truck owners and drivers. They have an asset-light business model, which provides growing gross margins. So a $1 trillion transportation and logistics market that they are tackling. They have 58 strategic customers in 2020 that provided 89% of their revenue. They also said they plan on making additional acquisitions and introducing a SaaS business model and expanding globally in their growth items. Revenue of $184 million last year, expected to hit $281 million in the current fiscal year and $437 million in fiscal 2022. Revenue growing at an annual rate of 55% from 2020 through 2025. Shares not reacting too much to this deal. And then we turn to our calendar. We have our merger vote of Fuse with Moneyline today, FUSE. Shares are up 6% today, so definitely keep an eye out. FUSE, we should get that redemption amount later today. And then we do have mergers tomorrow, LATN with ProCaps, AMHC with Jasper Therapeutics, and CTAC with Core. So 1 vote today, 3 votes tomorrow. All the redemptions have passed on those, so keep an eye out to see how shares react. And as I said, we should get those redemption amounts later. And then, Mitch, the big news that I did not highlight in the headlines because it just kind of started to hit the press and happen is that DraftKings, I don't know if you saw this, Mitch, DraftKings is rumored that they made a $20 billion bid for Entain. Entain is the European company who owns 50% of BetMGM along with some other assets. So I know you and I have talked, on air and off air about how MGM should spin off BetMGM, right? Make that online sports betting company a pure play, publicly traded. Right now they own 50%. Well, it looks like DraftKings is trying to acquire the company that owns that other 50%. So that could be a very interesting move here in the sports betting market. Also, RSI is up 5 or 6% today on that news because, again, we could see some consolidation in the sports betting market, which you and I have predicted for many, many months now.
Yep, I have to say this is just kind of showing the tail of the tape, we'll call it, and this is really something that I'm going to continue to see. We're definitely going to see these bigger companies just eat up these smaller companies because at the end of the day, what their mentality is survival of the industry. They're not looking even, I think, on how can we best our margins today. They just want market share. For right now, that's all their mentality is on. And with that being said, sometimes the easiest way is to go ahead and do an acquisition. Next thing you know, you have an extra, let's say 10 million subscribers or something like that. That's what's really going to make you move right now to get that market share state by state. That's what everyone's battling for. And that's why we even on our interview that we asked Penn, we talked about how they were losing market share in Michigan and how important that is. And this is what you need to be paying attention state by state. I mean, and then you have to like kind of aggregate the numbers to see, okay, so they're losing here, but they're winning here. And then you got to see, all right, so how are they really doing? And you're going to see, this is not going to be the only acquisition we're going to see. We're going to see a lot of these smaller names just get bought up because it's the easiest way to continue the growth process.
Yeah, and I do see Happy in the chat saying MGM tried to acquire them earlier this year. Yeah, so MGM owns 50% of that joint venture. They did try to acquire Entain earlier this year. The deal, of course, never came to fruition, but now DraftKings. Mitch, this is kind of interesting because, if DraftKings acquires 50% of, Entain, could DraftKings and MGM, operate a side-by-side 50-50 joint venture for BetMGM? I wonder what the long-term play would be because obviously DraftKings and BetMGM currently compete against each other. Mm-hmm. You mentioned Michigan, right? A state where Barstool has struggled for Penn. BetMGM is actually number 3 in Michigan, and they've been growing their share in many of these states. So I've been a fan of BetMGM, and I think, that this is only the beginning of this. I don't necessarily think DraftKings wins this, but I definitely think it puts a lot of eyes on Entain and that BetMGM unit. So to be continued as to what happens. But as I said, Rush Street Interactive, RSI, up about 5% today because, again, there was rumors that they were an acquisition target. And if you're getting a big bid like this for Entain, I think Rush Street is definitely going to look attractive, for other companies as well. So consolidation coming in sports betting, definitely an area to keep on watch. Mitch, how about that Helbiz move, right? HLBZ, so a micro mobility company, e-scooters. And now they're getting into media.
Good
I mean,
Lord.
you and I have watched soccer. We know how important soccer is on a global scale. So they own the rights, the exclusive rights to Serie B, the Italian soccer league. And they have now signed deals with Amazon for parts of Europe and Fox for North America. I don't know about this. I was a little surprised because I didn't even know Helbez had a media arm until a couple weeks ago, but they're definitely taking full advantage here.
Yeah, like Jose said, it could have been a life changer today. I can't blame you. I mean, when you see a stock go from, well, we were trading at $14, 14.25. Did this one start at 14?
I don't think so. That might just be the chart because it should have been 10.
This one I'm wondering, just at least from what I'm seeing on the chart. I had to. We'll make sure about that. But at least from action today, definitely a nice trading day. One of the things I do like is that it stair stepped up. It didn't really just like rocket, then come all the way back down to 16 or 18 today. We kind of did this little lift, pulled back, lift, pull back, lift, and then really stepped up towards that next level, breaking out through that 36 and then getting on up there towards a high right now of 41.33. I think you could see that number. Yeah, we just saw the number be broken here for 41.88. Let's see if we can get to 42 on this next push on up. We'll be watching HLBZ to see if it can continue its run. But definitely, I mean, one thing I would definitely wanted to just do is if we draw a sideways trend right here, just hold this. As long as it keeps holding this, I think it's going to keep on an uptrend. And 36 is that downside look where I'd be careful just in case this is turning back around. Yeah, it's an interesting stock, Chris. I didn't know about this one. And like I told Zoltan, I was like, yo, you can't tell me that it's going to come on tomorrow and not tell me yesterday. Come on, Zoltan.
Yeah, I mean, scooters. So I remember them presenting at our last I think it was the Benzinga small cap conference, right? And the talk was all about, growing in Asia, bringing scooters to more markets, also, hitting the US market eventually. And now, boom, soccer rights.
Well, Zoltan, as much as you want to say that the Series B is really famous, I think it's really famous, but in Italy. I think it's famous in certain parts. I mean, there is some good teams. I mean, you got like about 3 teams, but it's like the Bundesliga, right? I mean, I would compare it to that league where you have 2 major teams that are watched in different places, and a lot of the smaller teams are just not that watched in different outside of the country. You got these smaller teams, but hey, Zoltan knows the soccer. I'll tell you that much. And let me not say soccer. Let me say football.
Yeah, he'd probably get mad if you called it soccer, but
before I get yelled at.
Mitch, what else do we got moving? I mean, I'm seeing a lot of green. I'm seeing some double-digit movers out there. We've got Spire Global SPIR.
They're spying on us, man. They're spying on us.
They're up 32%. I don't know if I don't see any news. So I think this one is just getting some increased retail attention, but that volume looking pretty strong in this one.
The space trade. Let's see if there's any other ones moving also. Last time this one moved, it actually caused kind of ASTR to move. I'm not seeing that one up today at SPCE. I wanted to see if they were up today, and a little push on SPCE, but not much there.
Yeah, and Black Sky is only up 2%. So it looks like not just the satellite
the
plays.
Focus is on right here. The focus is here on this one. So that's what I wanted to take a look at to see if it was more of a space play. But look at the daily chart. Loading up here. This is when I first saw the first load up when we were in the 13s, and now we're ripping up there towards the 18s. What I'm starting to like, Chris, is that, for a long time there, these SPACs were not making any moves whatsoever. And we got to be honest, that's what was going on for a little while. And if it was a move, it would really quickly come back down. Now we're seeing different SPACs. Yes, I don't see exactly a pattern just yet, but I do see the momentum coming back into the industry. When I see stocks like this, holding sideways, pushing on up, not having that monster volatility move down underneath 10, then back above. That's what we want to see. Let's see if we continue to see this from the industry. What are you thinking, Chris? I mean, that's pretty good volume there. 6 million, 7 million shares traded. And we're really starting to see some volume come back into SPACs.
Yeah, I mean, I think people are getting back into SPACs, especially the ones that have completed their mergers, right? And then also the ones that did have that high redemption and are considered low float. So Spire Global, it's a satellite play. This is one that had higher redemption. I think the SPAC was NSH before it completed the merger. So this could be a continuation trade of, the high redemption, low float, as I'm not seeing news. Mitch, another one that caught my eye on the watch list is one I had talked about a couple times before, Indie Semiconductor, INDI. We're up 10% today. And again, I don't see news on this one. This is one that has, hasn't had the greatest trading chart since completing the SPAC merger. I've called it out, that semiconductor industry, the connected cars. When this deal first got announced, I really liked the story on Indy. And over the past couple weeks, this thing has started to trend higher. And again, up 10% today. So I'm keeping an eye on INDI today.
I would have to keep an eye out on that one. I'll tell you why, Chris. It was the first stock that grabbed my attention this morning when I opened my movers list and I opened the pre-market. I saw it up 9% and I said, all right, INDI making a move today. Let's keep it on watch. And one of the things that I like about INDI is that it hasn't had those super down, super ups. I like those stocks because they're going to continue in a stair-step manner. We don't want to see elevator moves down, and we don't want to also see those elevator moves up. We want to see that stair-step action in a lot of these SPACs. That's going to give you a little bit less volatility, but an ability to judge the stock a little bit better. Like, there's certain stocks that we have been seeing make big up and down moves. And that's why it's very hard to judge those because, you're going to get either stopped out on the pullbacks or when it breaks out, you sell early, and then the next thing it comes back, and then it rockets past that level. That's what we've been seeing in here. Let's take a look here at QS, man. We're finally starting to get off that $20 level where it was hanging out for a long time. And I got to say, I should have took a shot on this one near that 21, 22, because I thought 20s would hold and it gave you an out spot, right? That's what we always want. We always want an ability to at least judge the stock for the future. It looks like we're trading up higher after an 8K in the company showed a signed agreement with a second top 10 automotive original equipment manufacturer. As we know, batteries are going to definitely come into play. Regardless if how quickly EVs are going to come, I'll tell you one thing: they're going to need to get built first, right? And to get built, you need the battery. So I think this is one you definitely keep on your radar. It's one to have, I think, in the long-term accounts. I definitely want to have a little piece of some of the battery plays because overall, I think if you look at EV, batteries, autonomous, some of these are going to be massive winners, and we want to be a part of them. And the best way to do it is to diversify in the industry.
Yeah, QS, look at that chart. This thing was a high flyer last year, right? And, I think it's safe to say by now that it definitely stretched its valuation, right? This was at the height of SPACs when this thing traded, over $100, and it has come down, right? Yep. But Mitch, you've called this out. We've talked about, the $20 level. I think QS can be a good battery company. They are a little bit ways away, right? But now getting another top 10 auto partnership, right? We talk all the time with these EV battery plays, LiDAR companies, right? It's all about partnerships. You can make the best battery. You can make the best LiDAR technology. But unless you're partnered and a car company is actually using it, you're not making money, right? You're just making a great product. So you have to have those partnerships in place. So QS, I did not see that 8K this morning. Shout out Benzinga Pro. We've got the alert there. But up 13% today on that news. So QS definitely on watch today.
Yeah, one of the things I will point out is that it might have been somebody knew a little something here a little earlier. As you guys can see on the 17th, there was 14 million shares traded in the day. In 2 or 3 days prior to that, only about 4 or 7 million shares traded. So you're talking about double the volume. And you know how I always point this out. One thing that volume gives you, it doesn't necessarily mean that the trend's going to change. But what it gives you is that, hey, something is happening here. It's kind of like a flag. Pay attention to me. And that's what that sign gave you right there. And then what do? You see a reversal kind of swing here where it gives you a nice bullish engulfing candle. Then all of a sudden it swings back down. But what did it do? It closed above that low. And then today you get the good news, you get that pop up. Now what I'll be looking for is for it to close this gap because it gapped up. Now I'm okay with it being up here. I'm not going to overextend myself. But if this stock comes back down towards this high right here, let's say 2182 or near 22s, I'm willing to take a shot off that 20 down below for QS because the risk to reward now becomes closer towards a 5-to-1 or a 4-to-1 look than let's say a 2-to-1 look or even a 1-to-1 look. I like this risk to reward. I'm going to be looking for QS and we'll see if we can get it back down closer towards that gap, which we just got a gap up today. All right, well, I want to take one last one to take a look at, and that's DM. Reason why is I heard in the chat someone saying that, is this one finding the bottom? I compare this one very similar to QS because they get the partnerships they need, but haven't really got the product, right? Haven't really put it out there, haven't really been making that money. And one of the things that I can clearly see is volume starting to come in this one. Also 13 million shares traded. You look a couple days prior, 5-6 million shares traded. Keep your eyes on this one. I'm going to be looking for a reversal signal in DM to really start rocketing. That's desktop metals. Of course, what could help it? The same thing like QS. You start getting that good catalyst with a good technical move, then we can start seeing the story start changing and the fundamentals match the story and the technicals. All right, that's going to do it for our watch list. Look out. Of course, guys, we will save some time at the end to get to some stocks that you guys want out there. So definitely smash the like button. And guess what, guys? Coming up next, we're going to be getting into an interview with not Vacasa, Vacasa. Of course, guys, you guys are going to be having fun checking out a new company. Yesterday, we've been going kind of more into these vacation plays and learning a little bit more about these, Chris. So I'm excited to hear about this company. I know that you got some great questions like you always do. And let's go ahead and do what we do best, which is unlock the SPAC industry right here on Benzinga's SPACs Attack.
All right, guys. Yeah, super excited. Another exclusive interview here on SPACs Attack. Joining us on the show today, we have Matt Roberts, the CEO of Vacasa, that company going public with TPG Pace Solutions, ticker TPGS. Matt, welcome to SPACs Attack. How are we doing today?
Good, Chris. Thanks for having me on. Appreciate it.
Welcome on. Let's go ahead.
All right, Matt. Well, we are SPACs Attack. We talk all things SPACs and de-SPACed companies. First question we always like to start out with is, why the decision for Vacasa to go public via SPAC, and was a traditional IPO also considered by your company?
Yeah, absolutely. A traditional IPO was considered. Look, the end result is the same. We'll be trading independently. What's great is, I think if you look at the structure of our SPAC, there's no warrants, there's no selling shareholders. It's actually a relatively low float relative to the market cap. It sets up the dynamics, I think, really well to trade. And I think ultimately, at the end of the day, we get a great partner. The TPG partnership is great. Carl is co-founder of Hotwire. Lots of travel experience, domain expertise. So we get more than capital. We get really great operational expertise in the industry as well to add to the board.
Perfect. So Vacasa is North America's leading vacation rental management platform. For those out there who have never heard of Vacasa before, give us a little bit of the background. What is Vacasa all about?
Sure. Well, we're actually an interesting place in the whole ecosystem of vacation rentals, where we focus on the supply side. So our primary objective is to add properties onto our platform and power the whole growth of the industry, which is growing at 2x the traditional accommodation market. So think about it, we're the primary supplier to the industry. We're fueling the growth and the expansion of the growth. But if you're a second homeowner, you're our customer. We're really trying to allow you to start to rent your home and generate some meaningful income for yourself.
Perfect. So, obviously the investor presentation, one of the things that jumps out is some of those partnerships that Vacasa has. So over 100 channel partners, including Airbnb, Booking, Glamping.com, TripAdvisor, and VRBO. Can you talk a little bit about these partnerships and why they're so important for Vacasa's growth?
Yeah, well, as I mentioned, the industry itself is growing at sort of 2x the regular industry, and you can see that in all the results that are being posted. But what you also see is that each one of the distribution partners in their earnings are talking about how supply constrained they are. The key to growth is to making sure they have enough properties. There's a lot of demand, there's just not enough supply, and that's where we come in. So I think the nice thing is that we're such strong partners and mutually beneficial relationship between our distribution partners and what we do. We also are our largest distributor of our own listings. Roughly 35% of the sell-through of the nights that we have on our platform are actually direct to Vacasa.com.
Perfect. So, we mentioned Airbnb and VRBO there. There's a slide in the presentation that I'm real curious to get some more color on. I've stayed at vacation rentals before, and a lot of them are ran, by rental property management companies or a Vacasa. So in the presentation, it says that you can actually provide, on average, 20% more to a homeowner by switching to Vacasa. Can you, share with us, how does Vacasa provide this better opportunity for a homeowner to use the platform?
Yeah, well, it really starts at our core, we're a technology company that enables this service. And so we're able to apply that technology into doing real yield optimization. So think about the way that airlines do it and really the big hotel chains. That's brand new to this industry in terms of the level of sophistication that we bring. So that is probably the biggest driver, and we generate more revenue. And it's actually 21% more revenue the first year and another 10% the second year. And that's for people that are using another property manager. If you do it yourself, the value is even more compelling. It's over 30%, and then 5x if you value your own time. So it's really a compelling value proposition because it's rooted in technology. We're able to use that technology. We invest, tens of millions of dollars in the tech, and nobody else at the that local level is able to afford to deploy capital in that way.
Awesome. Yeah, we've got some great slides there. We saw the end-to-end technology platform. We also saw, the demand and the supply side. Why is it that Vacasa, is the leader here on the end-to-end platform, and some of the competition out there, can't provide the same offerings?
Well, really, the competition is local property managers. And if you just think about the budgets that they would have to spend on how expensive engineering is, right? And it's just, there's not an ability for them to spend behind the technology platform that we do in the same way we did it. And we started a long time ago. We had to build all of this in a proprietary way because there wasn't anything out there to just use. So there's just the scale advantage that we have right now is meaningful. The data that we're creating and using to our advantage and our homeowners' advantage is really meaningful. So it's just a matter of, we raised enough capital to make the investments to really reinvent the way that vacation rentals are done in the country.
Awesome. So again, I've stayed at some vacation rentals before, and, there's always some concerns, right? You want to know that the home's going to be safe, it's going to be secure, and also you're going to have some of those amenities, right? Like Wi-Fi and some smart home items. So it's mentioned in your presentation, that Vacasa provides that smart home technology. Can you talk a little bit about how Vacasa, provides this smart home technology for your partners and then their customers, and why that's important?
Yeah, absolutely. I think that this is just an area that we're still not even done with yet, which is everything from digital locks to get in the front door, our guest app that you can use to unlock the door, the Wi-Fi, making sure that the Wi-Fi is up and running when you walk in, noise monitoring, preventing those parties. Those are all the things that homeowners care a lot about, guests care a lot about, and it's helpful for our team too in terms of operational efficiency. So the investment that we're making in their smart home is helping to generate value across each of our users, homeowners, guests, and our own operations team as well.
You mentioned, this huge market. So we are seeing a shift, right, of vacation rental homes becoming more relevant to the industry. Can you talk a little bit just about the overall growth of people, offering up their homes as vacation rentals and how Vacasa can capture this growth?
Yeah, there's two really big macro trends, Chris. One is guests are preferring vacation rentals more than traditional accommodations. We talked about that. And by the way, this isn't just a COVID thing. This is a decade-long thing. It was 10% in 2010, and it grew to 30% in 2019 in terms of share shift. So that's way before the pandemic. Obviously, it's accelerated even more since then. And then there's the second side of this shift that's in our favor, which is homeowners are more and more willing to and interested in renting out their home. Think about it as, I think, a byproduct of the sharing economy. It used to be weird to get into somebody else's car, and now it's very normal in Uber and Lyft, etc. So I think it's become normal to share core assets, and homeowners are actually more and more able to use and factor in the income that they're going to make in order to decide, well, what vacation home can I buy? I think you've noticed that real estate in general, property values have just skyrocketed. And now, because homeowners are able to consider how much money they're going to make, we can actually help them afford to purchase that dream home.
Perfect. Can you just talk a little bit, about the TAM, right? The total addressable market. What kind of market share does Vacasa have right now? And where do you see, that figure kind of ending up over the next couple of years?
Well, we look at it from a supply side because we think the industry is supply constrained. We know it's supply constrained, as we talked about. There's about 5 million second homes in the US. So we look at that as our target market, and we're just over 30,000 today. So we're about, less than 1% penetrated against the domestic TAM. Actually, if you expand it out to the global market, there's 20 million second homes. So we're even smaller there. But our immediate focus is really on the domestic or North American market. So that's the current strategy, is just continuing to grow against this massive market that we have in front of us.
I want to dive into financials a little bit. One of the things that I saw in the investor presentation is, a compounded annual growth rate of 31% projected for 2021 through 2023. And if you look at Airbnb, who is, a partner of yours, and also, they are somewhat a rival in the vacation rental space, they're only forecasting 25% growth. Why do you think it is that Vacasa has this higher growth projection going forward?
Well, I definitely would put Airbnb much more in the partner than rival category. And our growth rate is purely a function of, do we believe in how fast can we add properties? And we have a proven playbook for doing both of those things. And so I really think that it's just a function of, we're really small in a big market. And we have a growth engine that's well developed, well established, gives us a ton of confidence. In fact, we just outperformed our second quarter targets that we did as part of the business combination. And we're on track to meaningfully outperform in the current quarter as well. So the projections that we put out there, we're already well ahead of, and we have a lot of optimism that we'll continue to do really well.
I'm wondering, with these financial projections, they're always hard to make. We did have, the COVID pandemic, which, for a while hurt the travel market, but it's actually helping, somewhat the vacation rentals. How hard were these forecasts to make with this ongoing pandemic in terms of, revenue and booking numbers going forward?
Well, I think it just was important to pay attention to sort of the current context, but also as we look to future years, we did sort of normalize some of the key variables like occupancy and ADR, and tried to get back down to a level on each of those variables that we thought was highly achievable. Because running public company myself for a long period of time, and Jamie as our CFO, we like a overperformance situation with our financial results. So we wanted to make sure that we had the right level of conservatism in our forward projections, and to do that, some of that just meant reverting back to some more normalization on some of our core metrics.
There was mention of, some M&A opportunities in the investor presentation. I know you can't go into specifics, but in terms of M&A, are you looking at, acquiring additional vacation rental companies, or maybe expanding into different verticals to diversify the company?
Well, part of our growth platform is really twofold. One is just adding individual properties through a direct sales channel. And the other is what we call our portfolio approach, where we add groups of homes that are currently managed by sort of local property managers. We call that our portfolio approach. It's part of our organic growth engine. We wouldn't really consider those acquisitions per se. We've done only 2 major acquisitions. One is Wyndham Vacation Rentals North America, and the other was Turnkey, most recently in April. So there isn't any other, thoughts about big acquisitions, because frankly, there's nobody else of scale to buy. When we go international at some point, then might change the dynamic. But in the near term, and certainly for the forecast that we've shared, it's all about running our growth playbook, which has individual and portfolio at its core.
Going public always brings, a forward-looking approach. So one of the questions I like to ask too is, what should investors and, potential investors, what should they be looking forward to with Vacasa? Any upcoming catalyst events or dates that we should be watching?
Well, I think obviously we're just looking through the process of getting the SEC review, and then, the de-SPAC process. And really, it's just about executing against the core operations of the business. We're so early in this massive growth opportunity, so it's just about growth engine is well underway. Our job right now is to run the business and deliver on all these positive initiatives that we have in front of us.
Perfect. Well, Matt, before we let you go, we do have some questions here from our viewers in the chat. If you have time, we'd love to ask some of them. It's something we love doing on SPACs Attack here. So up first, we have NCal asking, you mentioned the supply constraints. The question from NCal here is, how fast are they adding inventory? So can you just talk, I know this is a complicated process, but how quickly are you finding and adding inventory?
Yeah, I think the way to think about it is our forecast that has that 31% growth rate is really built on property additions. So our property additions are roughly in line on an annualized set of growth rate with that revenue growth rate in that 31% rate. So, that's the core. We have other opportunities for growth that could support, different growth rates or higher growth rates, things that we can do more on the guest side and on the homeowner side, or even potentially moving into other geographies. But the right way to think about it is sort of property growth will be in parallel to revenue growth in that 30+% range.
Perfect. And then we have a question from Brad here. You mentioned international expansion. This question is about Canada. So Brad asking, do you operate in Canada? Can you just break down for us, Matt, maybe some of the areas where you're currently located or operating soon?
We do. We operate in Canada. We operate in Costa Rica and Belize as well. I know that, and Mexico. We have opportunity for expansion and growth in each of those geographies. The real thing that we're trying to focus on right now is making sure that our tech stack and our process and our platform is really spun up before we branch into other international geographies like Europe. And I think that the market is clearly there, right? It's a significant multiple of the U.S. market, but it's also got its own challenges. And so we're just being really respectful of that. But yes, we are absolutely operating well in Canada.
Awesome. Well, there you go, Brad. Canada is on the list. Last question here from the chat from NCAL again, asking about marketing. So do they have any marketing that reaches out to homeowners in vacation areas to enroll, or do they rely on homeowners contacting them? Can you just talk a little bit about marketing and customer acquisition for us?
Absolutely. No, we have a really well-developed direct response marketing, that's very ROI based. But it has an advantage, which is we have more data on which properties we should have on our platform than anybody else. Being the largest provider and largest platform, we get all this data and all these signals, and we use that to our advantage when we're thinking about what prospects to market to. And then we have your classic direct response marketing that we do, and we pull those leads through with the direct sales that's local in every given market.
Perfect. Well, Matt, I know my family's looking to take some vacations later this year, maybe here in Michigan, and next year maybe in some other states. So definitely going to have to check out Vacasa, see which properties are available, and start booking some of these vacations on your platform. So again, for everyone joining us, or for joining our stream today, Matt Roberts, CEO of Vacasa, that company going public with TPG Pace Solutions, current ticker TPGS. Matt, thanks so much for joining us on the show today.
Thanks, Chris. Appreciate it.
Awesome. Well, you guys heard it here. Another exciting vacation company, right? We've had a couple on over the past couple weeks. We're talking all the time about, the pandemic, about some stocks to watch during the pandemic, post-pandemic. I've taken several vacations, and, I always like to stay at the vacation homes over hotels right now, right? It's just more of a personable experience, especially, with having kids. So, Mitch, what did you think? Vacasa, they operate in U.S., Canada, Mexico, some other places. They got international growth coming, and they partner with, some of the big players, right? Airbnb, VRBO. So definitely exciting company and lots of things to look forward to there.
Well, packing the bags, Chris.
Packing the bags. He's coming
I'm
now.
out. I'm out. I'm taking a ride. I already got a vacation set up, guys.
You booked one? So while I was doing,
see me later.
While I was doing the questions, Mitch is in the background booking a vacation. Do you guys hear that?
I mean, I couldn't miss out on the Hawaii
Jackson Hole. Oh man, there we go. Yep.
This is right around the corner. I could go.
Yeah.
I could go Telluride. We got Florida Keys here. Hey, gotta check out some of these dream vacations.
Wine country. We got wine country there. Yeah. I mean, we got to book a trip. So, man, that sounds
definitely
fun.
Hey, gotta check it out. One of the things that I definitely do see is that we like to have something that most can't, right? And this is an environment that we're getting to, and the consumer change that I've seen in the mentality, and that's why we pick these kind of one-time events where we can go towards a house of our dream, that dream vacation, right? When you think of hotels, I mean, even when you look at the biggest and best hotels, you're getting the same experience as the person next to you, right? You can knock next door and they're getting probably about the same experience, but there's something else about being somewhere where you are secluded and you get to have some of these dream vacation, these luxury moments. I definitely am going to take a look at some of the ones in Hawaii. I'm looking forward towards a Hawaii trip, or who knows, maybe out in Europe. I'm looking for some far traveling. And when I look for these far traveling, I want to be feeling like I'm local. I don't want to be feeling like I'm in that hotel environment. That's another thing that this gives you, is that local experience. Like, I'm sure the houses on the Keys. What? Let me know, because I used to love being on the Keys. And when you go to the Keys, you want to be close to the ocean. You want to see it in your backyard. You don't want to go into the Motel 6 with the little pool and feeling a completely different environment. So I understand why these companies are coming out. And one thing I definitely didn't know was how often probably in use Vacasa is really nowadays, like literally being in use. And most of us only know Airbnb. Some of us know Vervo, and we're definitely learning about some other companies that are stepping into the space.
Yeah, I mean, I definitely I like staying in vacation homes over hotels because you can control more, right? Hotel, you don't know who your neighbors are going to be either. I mean, who knows? You could have, a crying baby or loud people all hours of the night staying, one wall away from you. That's a variable that you probably don't want to deal with on vacation. You also might be in a room right by the elevator, which always seems to happen to me. And then you hear it, the whole time. So, definitely looking at these vacation rental companies. Mitch, let's turn back to our watch list. And guys, if you're seeing anything out there, or any tickers you want covered, go ahead, drop them in the chat. As I said earlier, we will not have a show tomorrow. We have our EV Con covering electric vehicles. Live here on Benzinga's YouTube channel. So we're going to get some great presentations from companies, including Hellbiz and Embark Trucks, two companies that are in SPAC land. But Mitch, it looks like DraftKings still falling down. It looks like shareholders, investors do not like a possible $20 billion purchase of Entain. Again, this deal was not announced. It's just rumored at this point. But what do you think, Mitch?
I mean, it just gives you an opportunity, right? That's the way I would look at it if I was in DraftKings. I mean, we wrote it up for this move to 60, but we never said that it was going to get to 100. One of the things with DraftKings is that, once again, let's think about the companies and where they're at in their cycle. The first drive, that first drive, it was just trying to put out positive news. But what has happened since this drop, right? What have we gotten? We've gotten multiple acquisitions. We've gotten multiple companies trying to innovate, right? DraftKings put out for a while that they're going to start doing these bars, right? And different things like that. That's what we're seeing here, guys. And it's okay for us to get some pullback, especially, I mean, when you think about that they're going to spend $20 billion, probably some of that has to do with shares, right? And so this is more a dilution look. Is this going to continue coming down? I mean, I wouldn't mind if it could come back down towards, let's say, 48 or 44, because I would definitely take another shot at it. But we have had 1, 2, 3 drives. The next drive, we would want to see it get past that high. So we'll see if we get back down towards 48. That's where I'd probably start taking a swing at it. And then the next level would be 44 on the downside. We'll see if DraftKings can find some support and get back up from the hard down day that we're having today.
Yeah, definitely. I think Mitch is spot on. It could be an opportunity. Again, this thing has been on a run because of the NFL season, which if you've paid attention and listened to Mitch and I, you knew well in advance that the NFL season was coming, right? It wasn't a surprise. We all knew what day it was going to happen, and DraftKings shares slowly started moving up into college football, into NFL, and now today we have that retracement because of this news. We've got Jeff here, Mitch, asking about HIMS. I haven't taken a look at the HIMS chart, but Mitch, I'll tell you what, I watched that Monday night football game last night, right, featuring my Lions, who decided not to show up later on in the game against the Packers. But one of the things I saw in the commercials was, of course, that Rob Gronkowski HIMS commercial, which I said was going to happen, right? They signed a partnership with Rob Gronkowski. And they also have Miley Cyrus. They also have Alex Rodriguez. They also have Jennifer Lopez. They've got some big names endorsing their products and doing those commercials. So I've been looking at HIMS. That chart was looking kind of nice there, Mitch, but now we're falling a little bit. But what do you think of HIMS here?
So classic chart where it looks good, decent, right up to this part, and then you start getting this kind of what are you getting here? Essentially, I mean, if you draw this is looking fine as long as it doesn't break this low right here, this 20th, because what this could be the right hand shoulder of an inverse head and shoulders pattern, right? And so this would be the head area, this would be the right shoulder, this would be the left shoulder, and as you guys can see, it has that inverse head and shoulders look. Now what we need to do is get it through that $9 look with some good volume. We did get that good volume pop right here on the 17th and also on the 7th. So now we're going to look for this to hold that 20 low. So that's $7.96. As long as it holds that, for me, it's in a bullish pattern right here. And I'll definitely take a look at it because, I mean, inverse head and shoulders are pretty good at telling us accuracy because it's usually about an 80% accurate pattern. I mean, of course, this is back testing, so it doesn't necessarily mean that this move is 80% to go up, but I definitely am liking the pattern setup on HIMS.
All right, and what else do we got in the chat, guys? If you've got tickers, otherwise, Mitch, I mean, I'm trying to see. We already covered a lot of these double-digit movers today. Helbis, Spire. I'm also seeing RBOT, Vicarious Surgical. Remember, we had them on the show talking about that, arm, right, to help with precision surgical devices. They completed their D-SPAC, and these shares have been on fire too, right? RBOT looks like we are up 17% today to 1476. So RBOT definitely another one. Keep an eye on these D-SPAC names, guys. They're getting hot again. Just remember that sometimes, holy cow, look at that move. Sometimes these moves do not last. So you always have to know what your thesis is, right? Are you in this for the story of the long term, or are you in this for the trade? Because the trade could be over, quicker than you know.
Hey, these are moving fast right now. And one thing I will tell you, though, is at least I'm happy to see that there's potentially back at it where we're seeing 20 to 40% gains when these SPACs make moves. For a while there, it was only close towards a 10 to 15% gain. And why Chris and I were probably taking profits faster than we probably should have. But the big thing is we were seeing the data not give us that return that we saw in early, let's say, November of 2020 and going into all the way until just before March of 2021. Now we're starting to see these back. Chris, like I mentioned earlier, there's something there. I'm definitely seeing the volume. I'm not calling out a pattern yet, but we're seeing definitely a volume there, a nice lift up. And I think this is overall what this shows to me, Chris. Maybe these institutions are not so negative towards SPACs as we think they are. That's what I think it is, Chris. When you get these moves where a bubble kind of goes away and they get scooped up off the bottom, guess who's taking the biggest piece down there? It's usually not retail traders. It's institutionals using their algorithm to hit that 52-week low. Then it waits a week. It hits the 52-week low, building up a position underneath while the rest of us retail get washed out. And then the stock makes a move up. Guess who's buying? While everybody else, while the institutionals are there just hitting the sell button right back to you. So this is the game that they play. It's not a fun game to be a part of, but I'll tell you one thing. We are a part of it, whether we want to or not. And institutionals, to me, are the ones that are causing these moves up, not retail traders. So just be careful out there, traders. And like Chris says, it can flip on a dime. And so we need to pay attention to there. Last thing I want to give before we get on out of here, we got the Power Hour coming on next. I want to give a shout out and an apology here to Tom. I'm feeling bad. I completely understand if you are behind a company, and I got to do a little bit better than this. We all got to do this sometimes. Is do a little better at not knocking a company that's already been knocked down, right? The company Nikola, we already know what's happened there. I don't need to keep knocking it down, and I'm gonna try to do better there to give a neutral outlook towards Nikola. But you guys know how I personally feel about the company. And you're right, Tom. All I did need to say was no. And I should have done a little bit better there. I wanted to give the apology yesterday on Money Mitch for you, Tom, but you're already gone. So just want to give it to you now. And at the end of the day, hey, if you're interested in Nikola and you're backing Nikola, power to you, man. Wish you the best. And hey, maybe it's just not the stock for me. All right, guys, that's probably going to do it for us today. Any last words, Chris?
That's it. Don't forget EVCon tomorrow. No SPACs attack, but join in tomorrow, starting up with pre-market prep at 8 o'clock and then EVCon kicking off at 9 a.m. You'll hear from some great companies, and stay tuned. We've got Power Hour coming up next.
All right, they're already live here, and I'm going to throw in the link here because I want you guys to switch on over. I know we've been having some battles with our redirects, so I'm putting it in the chat right here. This is the link to the Power Hour. Get on over, guys. I want to see you guys at the Power Hour. They're even going to have an interview. So, I mean, you guys might want to get on over there. I'm going to be maybe hopping in there, maybe talking about a trade. I know they talk about trades every single day. And who knows? Put AB to the test today. Tell them to take an options trade right there on streams live. You guys got the link right here. I'm going to get on out of here. We'll see you next time on the SPACs Attack, guys. Until then, hit the like and get on over to the Power Hour.